Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The headlines. Trade tensions shift as the Philippines and the U.S. strengthen ties. What does this mean for business amid China's rising influence in the ASEAN? Egg shortages, soaring prices, what's causing the U.S. supply crunch? With a fast-spreading bird flu outbreak wiping out livestock, how much worse could this get? A Filipino culinary icon gone too soon. Tributes pour in for Chef Margarita Fores as Filipinos honor her legacy and lasting impact. First, let's take a look at how financial markets performed overnight. Wall Street's main indices closed mixed on Tuesday as investors digested Federal Reserve Chairman Jerome Powell's latest remarks. The U.S. Central Bank signals no urgency in cutting short-term interest rates, citing a strong overall economy with low unemployment and inflation still above its 2% target.
I think stocks today are really just kind of holding their breath. We have a lot going on. We're going to have another day of Chairman Powell testifying, and we also have CPI data coming out. Those are going to be incredible influences on what the shape of interest rates look like.
The S&P 500 was flat, while the Nasdaq Composite lost 0.4%, and the Dow Jones Industrial Average rose by 0.3%. Elsewhere in the world, European markets closed in the green. The UK's FTSE up by 0.1%. Germany's DAX gained 0.6%, and France's CAC 40 rose by 0.3%. As global tensions rise, the Philippines looks to strengthen trade and investment ties with the U.S. under Trump's second term. With China dominating supply chains, Manila is pursuing a strategic deal with the U.S. and Japan to protect its mining industry and to boost economic independence. Experts say a U.S.-Philippine free trade agreement is now more likely as the country seeks to diversify trade and attract new investments. Sujin Kim has the details.
With economic and geopolitical tensions escalating in the region, the Philippines is bolstering its trade, security, and investment ties with the United States, a strategic move to secure its economic and national interests. The Philippines is pushing for a critical minerals agreement with the U.S. and Japan to maintain control over its mining industry and avoid overdependence on China.
Pursue it even more vigorously this time, because again, it will be mutually beneficial for both the United States and the Philippines. I think people should realize that the Philippines actually, the minerals that we have in this country is top grade. In the world, we're somewhere between number 2 or 3, or somewhere there, the top 3, what they call very valuable type of minerals. It's high grade. And that's something that we have. We have it here, and we should use that as a bargaining chip to be able to get better prices.
Currently, over 90% of the country's mineral exports go to China at low prices, a situation the Philippine government is determined to change by developing local nickel processing facilities.
This is an opportunity for the Philippines to finally really find a way to be independent in terms of our economic dependence. We have to make our economy really strong enough and resilient enough to withstand any kind of pressure, so that we have a strong base for us to be able to negotiate on what is best for our country. This is the only way we can survive this.
To prevent China from dominating the Philippine nickel industry, similar to what happened in Indonesia, where China now controls 90% of the sector, the government is actively seeking investments from the U.S., Japan, and South Korea. Experts say a U.S.-Philippines free trade agreement is now more likely under a second Trump administration, especially as the Philippines has the lowest trade surplus with the U.S. among ASEAN countries, standing at just $4 billion.
The climate for the U.S.-Philippine relationship is a positive one. I mean, there are no big negatives floating around.
However, experts recommend a more strategic approach, focusing on sector-specific free trade agreements, particularly in mining, semiconductors, and renewable energy, to accelerate negotiations. Government officials also reassure that the Philippines has little to worry about regarding U.S. trade protectionism, as its trade surplus with America remains relatively small. Sujin Kim, Bilyonaryo News Channel.
7 Bilyonarios joined the board of directors of the U.S.-Philippine Society. These include Sabine Aboitiz, Helen Yuchenko D., Federico Lopez, and Manuel Villar Jr. Lucio Tan III, Josephine Gotiano Yap, and Crispo complete the group. The new directors are tasked to help strengthen the relationship between the Philippines and the United States. The Philippines and Cambodia are strengthening bilateral ties. President Bongbong Marcos and his Cambodian counterpart agreed on this during their meeting in Malacanang on Tuesday. The leaders discussed combating transnational crimes and expanding economic cooperation through 8 new agreements covering digital transformation, agriculture, food security, and tourism. This marks the first official visit of Cambodia's Prime Minister to the Philippines.
The visit of His Excellency the Prime Minister reflects another important milestone in our long-standing ties with Cambodia. To our friends from Cambodia, I wish to reiterate that the Philippines is open for business, and we welcome the opportunity to partner and achieve greater commercial successes with you.
We remain committed to ensuring a welcoming and supportive environment to our Filipino friends. Our multilateral cooperations, Cambodia underlines the importance of upholding ASEAN unity and centrality, especially at times of conflict and geopolitical dynamics. As the Philippines assumes ASEAN chairmanship in 2026, I assured President Marcos of Cambodia full support. I look forward to continuing work with President Marcos to expand our partnership and mutual prosperity, and hope to welcome Mr. President to Cambodia in the very near future.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Trading at the Philippine Stock Exchange opened earlier. Let's take a look at the initial figures. As of 10:10 this morning, the PSE index is in the red. I'm looking at a sea of red right now. The PSE index is down by 0.5% to 59.59. The broader all shares index down as well, down by 0.3% to 35.95. The financials, industrial, holding firms, services, mining, and oil and property counters all are in the green. Particularly leading the losses is the services sub-index. It's down by 1.8% early in this session. Now, at the foreign exchange market, the peso opens weaker at 58.20 against the greenback. That's from its previous close of 58.19. Now, some analysts remain slightly bullish on the Philippine Stock Exchange Index, forecasting a possible climb to 7,600 this year, despite recent market weakness. First Metro Securities Vice President and Equity Research Head Ruben Mark Angela says improving economic conditions and a potential tax cut on stock transactions could support the market's momentum. He notes that lower transaction taxes may boost liquidity, improve the country's credit outlook, and drive domestic consumption. His projection comes as the PSEI is lower by 0.5% right now to 59.59. This is a pretty low level for the PSE index. Now, with the PSE index falling back to the 5,900 level, investors are wondering what's driving the drop and what's next for the market. To help us make sense of this situation, we're joined by Christina Ulang, the research head of First Metro Investment Corporation. Hi, Christina.
Hi.
Good morning. Always
Hi,
good to have you with us.
Yes. Hi, good morning, Maiki. Happy Valentine's Day.
Almost happy Valentine's Day. I
Almost.
mean, it looks like Valentine's Day. There's so much red on my screen right now. Christina, the PSE index easily breached the key psychological 6,000 level yesterday. We're at 59 today. How significant is this, and what does it signal to investors? It seems like the narrative has largely changed. Before, it used to just be economic growth, inflation, and interest rates driving the market. Now there is this Trump risk premium. Tell us what you think about all of this.
Well, the market is now dealing with a different dynamic, and this is all about trade war. And it's not the physical war, but it's trade war. And this is being initiated by the US, and the perception from some of the multilateral is that it can slow growth. Global growth could be slowing by 1%, negative 1%, but it's still emerging markets going to be the leader in terms of growth, and that's good news for the Philippines. But unfortunately, the market is not pricing that in because we are really a small market, and foreign selling continues, and it's risk off. And interest rates are not likely to go down in the US. The Fed has been very hawkish, saying that maybe there could be no cut in the near term, and that's going to be strengthening the US dollar. And as we know in the past, when the dollar is strong, that has been a negative for our market. So it's an entirely different dynamic this year, 2025, and the market is dealing with a lot of headwinds and a lot of unknowns.
Yeah, the situation has definitely gotten a whole lot more complicated, Christina, more strenuous and more uncertain for investors. How much of the PSE's drop would you say? I mean, is it pretty much all because of these external pressures?
Philippine fundamentals are very encouraging. Inflation is within target, 2.9%. Our loan growth is 8%. 11% accelerating, and the guidance for the coming from the banks is that they will be growing like low teens, 12%. Unemployment rate is 3.1% for the Philippines, and GDP growth is likely to be within 6% to 6.5% this year. So all of the fundamentals are pointing to a solid domestic demand growth. But unfortunately, this is not registering in the market right now. And a lot of the, maybe 90% of the drug on the market, and the one fueling the risk of sentiment is really global developments. Those policies that are pointing to strong dollar, tariff, a lot of uncertainty on the global growth outlook and inflation, and hesitation of most central banks to cut their key rates. I think those are the factors that are prevailing right now, muting the very strong fundamentals of the Philippine corporate sector and our own economy. So it's mostly, a lot of it, global external development coming from the initiatives of the new administration in the US.
Yeah, you said it, Christina. We've got a possible rate cut tomorrow. Not even that is enough to help lift market sentiment. It's being largely ignored. The expectations of a 25 basis point cut by the central bank's monetary board tomorrow. Are you of the view that they're going to be cutting rates by this much?
We should be looking at what would be the motivation, what would be the consideration of the BSP for cutting rates. First of all, inflation is within target. It may be on acceleration mode, coming from 1.9 in September, 2.5, 2.9, and then 2.9 last January. It's within target. Core inflation is also moving lower, 2.6%, and rice is going to be capped. The price of rice is going to be capped at 55 pesos per kilo and 38 pesos per kilo on the lower side. So all of these are very good indications that there is really room for the BSP to cut interest rates. And secondly, government needs to have some room for lower cost of borrowing, because the national government is funding a deficit of like 1.3 trillion this year. They need to borrow about 1.3 trillion also, a net on net finance basis at 2.5 on gross. So they need to have a lower cost of borrowing. And thirdly, our growth our growth, if you remember, our personal consumption expenditure, which is about three quarters of the economy, has slowed to 4.8%. So slowing economy should prompt the BSP to cut interest rates to stimulate the economy. So those three reasons, I think, would be the major considerations for the BSP to cut, even by 25 basis points.
Yeah, the strength of the dollar is a big problem globally, even for us. And the narrative now is from the focus now is not on reining in inflation anymore. It's really on spurring growth. Speaking of growth, our trading range, the PSE index, it just seems to be getting lower and lower. As investors look for, whenever the market goes up a little bit, they take the profits right away. What is your outlook for the trading range over the next couple of months in this kind of environment, Christina?
Yeah. This February, we are going to have this MSCI rebalancing, and there could be some outflows, and therefore the bias is towards a lower portion of the trading range. But as you observed in the previous weeks, we have been moved lower, like coming from 6,000 to 6,300 range, and now we are at the 5,900 to 6,100 range. And I think the market's going to be on a wait and see, maybe finding some relief, maybe a relief rally after the 25 basis point cut. But the market's really very uncertain and risk averse. That's why for every up move, there is a corresponding profit taking. And there's really no momentum with regard to any upward movement because the foreigners are out, and there's really very little appetite given all the uncertainties coming from the US, and then the peso volatility is also ever present. We are also prone to a lot of weather disturbances like we've seen last year. So the market may be trapped within this range of like 5,900 to 6,100, and may even test the lower end, like maybe 5,800. So things are moving very fast in the US. They have slapped 25% on steel and aluminum shipments to the US. That's really one of the next big thing in as far as this tariff thing is concerned. And so market sentiment's really very negative now.
Yeah, you said it. And the MSCI rebalancing you mentioned, that's the end of the month, February 28th, that could make us go lower. In the meantime, what's going up? Safe havens, gold, the US dollar, and bonds. What are the most, are you seeing a rally in bonds right now? And what are the most attractive tenors, Christina?
There is actually, that's the good side of the market. There's actually an ongoing rally in the bond market, and that's really a reflection of the anticipated 25 basis point cut by the BSP. And we know that bonds flourish during times of uncertainty and times of a slowdown. Since the global economy, the IMF has said is going to be growing below the historical average, like 3%. The World Bank is saying global growth is going to flatline at 2.7% because of the tariffs. And we know that bonds usually flourish during these times of uncertainty and slow growth. And there is a bias among portfolio managers to really load up on fixed income instruments that give you the recurring income, the steady recurring income, given that bond yields are not expected in the US to go down. So while we may be having a bit of a rally now, bond yields may be still elevated and will not really drastically move lower because the expectation on the number of the rate cuts have been trimmed, like 75 basis point cut earlier from the BSP. Now it's just 50 and
right.
Almost zero for the Fed maybe this year.
All right. Well, thank you so much, Christina Ulang, for sharing your thoughts on the market with us as always.
Thank you too. Bye-bye.
Now, in other news, the Lim Kiat Kai family feud heats up as Cagayan de Oro businessman Alfonso Lim fires back at his brother and nephew over allegations of stealing nearly 300 million pesos, calling the claims baseless. A source tells the Bilyonaryo news channel that Alfonso, chairman of Lim Kiat Kai's sons, had full authority to disburse the funds, dismissing the accusations made by his brother, former director Benito Lim, and nephew Benhan Lim Kiat Kai. The source explains that Alfonso used the funds to buy out a 23% stake in Lim Ket Kai Manufacturing from Transnational Investment Assets in 2015 and in 2016, a move he claims was approved. Lim Ket Kai's sons had earlier filed a qualified theft case against Alfonso for withdrawing the company's funds from PNB without the board's approval. But a source reveals that Benito himself granted Alfonso full authority to negotiate the buyout while he was still a director in 2014. On another front, a dozen senatorial candidates backed by the Marcos Jr. administration kick off their campaign in Ilocos Norte, the Marcos family's stronghold. Xandro Ochona was there. He filed this report.
All 12 senatorial candidates of the administration slate were present during Tuesday's kick-off campaign rally. Supporters who attended the rally were in for a treat from singers Sherin Rehis and Bugoy Drelon, among others. But the crowd went wild when Andrew E. performed. Before the program, several candidates shared their priority bills once elected.
Ang napaka-importante ay makapagbigay po tayo ng libreng gamot para sa ating mga senior citizens na kinakailangan po ang maintenance medicines.
As a member of the Alyansa, isa po yung goal namin to make laws, magpasa ng batas para sa ekonomiya, ikagaganda po ng ekonomiya.
Yung partido namin, yung NPC, kaya kami sumama sa Alyansa is because we wanted to support the programs of the President. Kaya wala nang babagay pang kick-off kundi dito sa Ilocos Norte.
It was a chance for Ilocanos to know the administration slate. Ilocos Norte representative and presidential son Sandro Marcos was also present as he introduced his father, President Bongbong Marcos.
Bagamat nakatuon ang pansin natin sa ating mga kandidato para sa Senado, huwag po natin kaligtaan ang halos 18,200 na local executive na ating ihahalal sa Mayo. Nabanggit ko po ito dahil may pagmamalaki ng alyansa na kami lang ang may kumpletong ticket mula sa senador hanggang sa sangguniang bayan ng pinakamaliit na bayan ng buong Pilipinas.
Xandro Ochona, Bilyonaryo News Channel.
U.S. President Donald Trump reaffirms his plans to take control of Gaza during a meeting with Jordan's King Abdullah at the White House on Tuesday, a move that could have major geopolitical and economic implications. Trump insists Jordan will accept displaced Palestinians despite King Abdullah's strong opposition to the idea. His proposal, which denies Palestinians the right to return to their homes and aims to redevelop the enclave, has sparked outrage across the Arab world. The new Middle East conflict could spike oil prices, impact global trade routes, and create uncertainty in financial markets. For the Philippines, this may translate to higher energy costs and more volatile foreign investments.
We're not going to buy anything. We're going to have it, and we're going to keep it, and we're going to make sure that there's going to be peace, and there's not going to be any problem, and nobody's going to question it. And we're going to run it very properly, and eventually we'll have economic development at a very large scale, maybe the largest scale on that site. And we'll have lots of good things built there, including hotels and office buildings and housing and other things.
Back here at home, the country mourns the loss of Margarita Fores, a pioneer who brought Filipino cuisine to the world stage. From Chibo to Luso and Grace Park, her restaurants reflected her passion and innovation. Hannah T. looks back at her life and legacy.
The culinary world is in mourning whenever the name Margarita Fores is mentioned. Her love for food and her passion for sharing it with others comes to mind. Known to her family and friends as Gaita, Fores is celebrated for bringing the flavors of Italy to the Philippines. Born into the prominent Araneta Fores family on March 23, 1959, she grew up immersed in elegance and tradition. She attended Assumption College in Makati and spent part of her youth in New York, studying at Marymount School. She graduated with a degree in accountancy from Assumption College. Her life took a turn in 1986 when she traveled to Italy and discovered her love for its cuisine. Under the tutelage of 3 renowned Italian chefs, Fores immersed herself in Italian food and culture. Upon returning to the Philippines, she introduced Filipinos to modern Italian dining. In 1997, she opened Cibo, a restaurant that continues to define casual Italian cuisine in the country. Through her other restaurants, Grace Park, Luso, and Alto, Fores promoted farm-to-table dining and championed Filipino ingredients. But her passion extended beyond the kitchen. As a mother, she poured her love into raising her only son, George Amado Fores. In the world of culinary arts, she was an icon. In 2016, she became the first Filipina to be named Asia's Best Female Chef by the organization behind the world's 50 best restaurants. In 2018, the Italian government awarded her the Order of the Star of Italy. The following year, she was named a United Nations Ambassador for Gastronomic Tourism. Despite battling cancer twice, she never lost her passion. In 2024, she rebranded her food and beverage group under her own name and opened a new signature fine dining restaurant at the Ayala Triangle. Margarita Fores was more than a chef. She was a visionary who brought global flavors to life, showcased local ingredients to international audiences, and inspired countless others to follow in her footsteps. Hannah T., Bilyonaryo News Channel.
And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel, always on top.